Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week. I do it Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can interact with the show, though. You just pop over to NeoTA TV here at the TA Today site. You can come down to this part here and it tells you how to do so. Markets. Let's look at what happened today. So today that was the Fed day, right? And we've actually got Bank of Japan tonight. Fed day was, the main event. The Fed speaks, they end QE. Language pretty much the same. I read it twice to make sure I didn't miss anything. Probably one of the more telling things is that the dissenter was no longer the hawks, but the dove. So that tells you that it was a little more hawkish than has been, or at least that's the way they voted. They did leave that door open to an extended period of time in terms of raising rates. So, they've repeated that whole, reiterated that whole data-dependent thing. We may raise them faster than you think, or we may raise them slower than you think. So that doesn't really tell us anything. What tells us something is the dissenter and the reaction. The reaction was the dollar went up, commodities for the most part dropped, with the exceptions of grains and the oversold bounce in oil and gas. Bonds initially sold down but then rallied back. And equities did give something up, although not much. So you can see that all in the numbers here. Dollar got strong. And that tells me that the market is expecting interest rates to go up mid-June, July next year at the latest. They're starting to price it in. And that's what the dollar strength tells me. So the way I read this is that this market is probably going to try and pull back here at some point. Now, if we look at the equities and we try to read them for the signals, we've got a very mixed picture for tomorrow. And it's because there's multiple signals all on the same day here on Fed Day. So if we take them one by one and we start here with the S&P, you've got the most obvious thing probably to start with here is you've got this over and under but slightly heavier volume. So you go over, you go back under, right? You've already got this huge extended move, but you have a little bit more volume, which says, hey, I can do it again, right? I'm not done, or I don't have to be done. The other thing that you had is you actually had this pull back far enough today on the Fed news to test back into this high. And if you take and look at the volumes on them, you had 44.4 there, you had 37 on the way back. So you had lighter volume testing into the retest regen off the high. So that says, hey, that should hold, right? So that's a positive as well. So you have kind of two positives. The negative is that you're testing this high. You got 39.5 there, you did 37. So you went over. You tested, you failed, and you're extended. So very mixed signals with respect to the S&P 500. It looks like it's going to try again. You've also got a doji as the bar, and a lot of times dojis can be the reversal. So to me, it's a very mixed picture when I look at the S&P 500. If I flip over to the Dow, it's a little bit different in that the Dow actually went over under, so it's a two-bar reversal because they had a lighter volume, and it's a failure at the swing point high. So the Dow is given a clear signal it wants to try to pull back. It's the only one given a clear signal, though. The NASDAQ composite, yesterday's high, 45.64.29. Today, 45.64.44. So you go over it, back under it, heavier volume. And just like the S&P, you test back into the swing point high. That test comes back against 22 and you did 21. So it's just like the S&P comes in with a little bit lighter volume. Says it wants to try to test higher again tomorrow. The NDX. Inside bar, which usually doesn't tell you anything, although it did come back enough to test back into this prior high. There's 22 over there, you do 21.8 on the way back, so that one also looks like it wants to test higher. And all these left dojis. And finally the Russell goes over, back under, same sort of scenario, right? But has slightly higher volume, which says it can test higher as well. And it tested back into the prior swing point high, and it has heavier volume, which is a slight negative, which says it probably wants to try to test lower again. So if all that doesn't confuse you, let me just say it this way. The indexes aren't telling us anything with a straight face. And unfortunately, the sectors aren't either. Because if we flip over and look at those guys, here we've got some confusing things too. I mean, for example, we got the IBB that comes off with some volume expansion, which says it wants to pull back. We got the IYT, which comes off, but first went over, tested higher, had more volume, and tested the swing point low, the high, that's a bullish retest regen, and has more volume. What does that say? Well, it says it can test higher or lower. Well, hello, that's what we're getting everywhere else, right? And if we go through all of them, you're going to see the same sort of thing through most of them. Mixed signals here, mixed signals in the indexes. So if we can't figure it out from there, is there anything else we can figure it out from? Well, we've already touched on that, when we were talking about the ox markets, in particular the dollar. So if we go look at the dollar, the dollar pushes higher, gets back, I believe it closes over that swing point high, closes right at it on the penny, has much more volume. Looks to me like this is going to break through this and go test the highs, or at least test this bar down, but probably the highs. That's where the volume sits. So the dollar has done its consolidation, right? And the dollar is actually setting up to try to go test this high and potentially break out and move higher. Now, if the dollar starts another fast move up, you can bet that's going to be a problem for the market, and just the dollar starting back up is probably going to be some sort of pressure to some degree on the market. So the dollar seems to be suggesting that we are going to get a little pullback. Now, TLT bonds also are suggesting the same thing, because the bonds, the swing point high it was doing a retest regen on was here from August 29th. That low was 118.75. You got up underneath it, 118.42. You close over it. You do 9.1. You had 8.5 there, so you hit it with a little bit more volume. But if you look at where it broke out from, which was here, you had 8.7, 9.1. So actually it did have more volume. I thought that one was a little bit higher. So it did test down, had more volume, had less volume than this spike down bar. So that's a very close one, but it did hold on the retest regenerate, and we know we have high at the volume at the highs. Bonds look to me like they're about ready to try to flip around, at least work back up into this area here, which is the congruent area at the bottoms of those wide price spread bars. So another push up here into this area most likely is coming on the bonds. If the bonds are trying to go higher, the dollar is trying to go higher, the market's probably going to try to work lower. Does look like we're going to get some more testing tomorrow, though, before it tries to give it up, if that's what it's going to do. Now, if I'm a bull, all I want to see is this market hang up here near the highs, right? I mean, that would be the best thing. You hold up here for 4 or 5 days, maybe 2 weeks, and then you try to take off. That would be the ideal scenario. We know the market doesn't always give us the ideal scenario, but that's something to consider. Now, the opposite, not the opposite, but the other case is that, it holds and then eventually breaks lower. That too can happen, right? Because we do still think we're in a range trade, even though this range trade is a lot bigger, went a lot higher than we thought it would. And so when we look back here and we use the daily again, you know, this still can be a range trade. It's just that it's a huge range trade from the top now, you know, and probably you'd have to say, okay, it's somewhere in here. It's held over this price point too long now to make me think that that's the top, but you know, maybe the top is, you know, right here at that resistance zone where it is now, and it goes down into, you know, maybe this area about there. So, you know, wherever you know, we're going to need some more information, but wherever that range comes in, you know, that looks to be still a range trade here in all the other indexes. So, you know, the next test will be whenever this turns, whether it's here, a little bit higher. Does it hold, say, this area? You know, does it hold here? Does it hold there? You know, where's the bottom of the range, so to speak? And then once it does that, what does the next push look like? You know, can it hold, in this case, can it hold this retest regen zone? And it's a big bar, so it probably can. And if it does, and you set up something like this, you know, can it regenerate higher? Or do you get another bounce up that fails and you regenerate lower and you build out the range farther? So, you know, it's going to be a lot about how does it trade back into wherever the support is. You know, the way this thing has pushed up, the major support is right in here now. So, you know, you pushed up far enough, a trip back down to here. I mean, we're talking 50 S&P points. It's not a small drop. So, you know, I would think 50 points down, you might find some buyers. And so that's the way that thing is kind of setting up. And then it's going to be okay. How does it play out after that? I suspect those buyers are going to come in and they're going to try to take the top out, and it won't be here. It'll be where the strength is, and that strength is over in the NDX. So on the next move, you know, if it comes tomorrow and it tests that top, that's actually the worst case for the bulls. I wouldn't want to see the top tested if I'm a bull. Or, you know, does it just hang here and then start back down and you find support just like on the S&P, you find it in this area here? If so, then you can set up the ABCD structure to try to take you. This will be the one that breaks out if they're going to break out. And it's got a big high volume top that it sure looks like it got so close. It sure looks to me like it's going to test it at some point. That's the indexes. It's a long way of saying tomorrow's mixed. I suspect you're going to get some sort of a pullback, but it does look like it can test again tomorrow. The other thing that's slightly positive is world markets. World markets getting a little bit stronger. I was looking at the DAX. DAX finally got over the retest regen bearish, so that puts it in a range trade. There was another one that did the same, and you got some bounces off the lows. I'm pulling up the DAX now. So the DAX trades up, and even though it's an ugly candle and looks like it's going to come right back, it did get over it and stayed over it. So the retest regen zone here has been cleared, which says we're probably going to get some sort of range here. Now, of course, these are a lot weaker. You know, the world market's a lot weaker than ours, but you would think that range maybe is in here somewhere. And that will be the coinciding probably with a test on our markets as well, because we're the strongest ones. You know, once we show some weakness, then everybody else will show it again probably. Okay, let's take a look at some questions, some viewer questions that were emailed in. So let me pop in here and grab one. So the first one has to do with ZAG. You get the symbol typed in so we can take a look at all the time frames. So this one reports earnings on, looks like 11/4. And the question is where's short-term resistance and where's a short-term entry exit point? So ZAG had a big, spike up yesterday, and I'm not sure what's driving this right now, but it had a huge spike back down today, yet holds right, holds on lighter volume and closes near the top. So when I'm looking at this and I pull over the weekly, to get more perspective, there's 2 swing point highs it's trying to break on the weekly. Now, if it holds through Friday on the weekly, that's pretty positive action. And so where is short-term resistance? Well, there's none on this chart. And if you go to the weekly, there's really none on the weekly. So you have to go to the monthly. And if we pull the monthly up, the resistance really is this breakdown bar. That's where all the volume is. Top of that guy is 689. You're also coming into the 2 swing point lows. So these are retest regions, but they're huge wide price spread bars. You've touched them once, or you've almost touched them. 619, those lows were 640 and 623. But now at 648, you're into the bar finally, and you can see the volume there. So your resistance, where you can find it on long-term charts, is right here. So that that resistance basically is from 640 down to about 620. So that's the resistance. So where's the short-term entry? Well, it was right here today. And I actually got this late yesterday, and I responded, and hopefully I did say that. I don't know. I'm looking back to see if I can see in my notes, but I can't read it fast enough. But, the support zones were down here, right around the bottoms of these bars, and that retest regen off the swing point break of the high. And it held. So to me, this is a very positive. It looks to me like it is going to try to work higher into earnings. I don't know if somebody knows something on earnings. It certainly looks like somebody thinks they know something. And 11.4 puts it out at what, next Tuesday? So it's hard to trade in front of this. But if I were going to trade it, I would simply try to buy the retrace back into the swing point high, which is where it went today. Don't have much more to say about it. That's where I would be looking. If it were me, I'd probably just be waiting. If I'm, I usually, unless I feel strongly about a stock, I don't trade in front of earnings. It's just too dangerous. Okay, that's ZAG. Another question had to do with, it wasn't so much a question, it was a comment. It actually was a good comment. And it was like, okay, if the U.S. equities are so strong, and I've been pointing out that, we're pretty strong compared to, the emerging markets, for example, the EEM. This looks very different than our charts, right? They're struggling just to get back up off the lows. And if you look at Europe like we just did with the DAX, they too are struggling just to get off the lows, right? The DAX was the strongest one, gets back over the retest regen, but the others are still struggling, most of Europe. So with that backdrop, the comment was, it was a good one, it's like, okay, well, if that's the case, well, is the money from there just moving to here? Yeah, probably so. To some degree, it probably is. And not only that, you've got the currency situation too. With the dollar getting stronger, you'd probably want to be in U.S. equities, not in European equities, or not in emerging market equities. So from that perspective, it's also true. So, yeah, I think it's a good point. It was a good comment, and I appreciate it. It's a good thought, and I suspect that's already going on. The question with anything that happens like that, in a way you can say, hey, that's a trend. In other words, the trend is to take money out of those markets and move it into these. But then the question is, okay, how much is there to move, and how much is going to move? I don't know the answer to that. All I know is these look a lot weaker than ours, and probably that's part of the reason. You push your money into where the strong is, especially if the dollar, the exchange rate, favors it, which it does. Okay, so looks like I'm running out of time again. I was going to cover at some point some ideas with respect to broader ideas. One of the things I try to do for my members educationally and through, both if they subscribe to both packages, in other words, if they're getting the tools, then they're seeing, like the trading cube, they're seeing the charts, all those things, as many as they want. But they can also subscribe to Trade with LA, which is a working man's portfolio. You know, many years ago when I just engineered, and I had an engineer for a living, and I, traded on the side, I created a process by which I could trade on a daily basis, by reading my charts at night and putting my stops and orders in for the next day. And I called it a working man portfolio because I really wouldn't be able to trade it during the day. I had other things to do in my, my real life, so to speak, right? And so, I would have all my stops in, my limit orders in to get in and stuff like that. One of the things I learned, and of course I learned before them, but, became more practicing of, was just the whole risk management, portfolio and risk management for that portfolio. And a lot of the scale in, scale out type stuff I developed, a lot of the strategies I developed to have core positions and trading positions, a lot of that stuff all originated back when I was doing that. And now I teach that, or I use that as a teaching mechanism. If people want to follow those trades verbatim, that's great. I think they're good trades. I'm not going to make bad ones, or at least ones I think are bad, right? And at the same time, I can kind of educate how to do that, because the whole point, if you want to be consistently profitable, you can't be invested 100% all the time, because if you do, then you're no different than the market, which means you're going to take the huge drawdowns when they come. So you have to be able to understand when the risk is elevated, and you pare down your size. That's portfolio risk management. And when it's the opposite way, well, in that case, you're going to want to go and put more risk on. So this risk management is something that would be useful to talk about in a larger forum, and maybe I'll try to break it down in pieces, and we kind of go over it here and there. For members, you can actually go, if you haven't, you can actually go to the video library, and you can pop in here, and there's some stuff on portfolio risk management, theory, and then there's some other stuff in here. These are your video libraries that are available to you if you haven't looked at them. Some I still need to record, the ones that aren't highlighted, a few of them in here, like there's one I still need to do. But, the idea is that you can come in here, use these, to beef up on at least the way I take the market and use the market, use the signals that the market gives me to try to be consistently profitable over time. And if you do that, the big key is you don't give your money back, or at least you don't give very much of it back. And if you do that, over time, you're going to outperform, and you're going to outperform with a lot less risk. And that's the whole point. Because if you're taking as much risk as the market, then it doesn't mean anything. You've got to be able to somehow have less risk and perform as well or better. And that's a chore, but it can be done. And, I'll see if I can throw some of that in as we go in kind of a broader perspective. All right, I'm going to have to wrap it up here. Tomorrow I expect it to be kind of mixed, and some more testing, upside and downside. And somewhere in here, believe it or not, they're probably going to pull this thing back. Have yourself a great night. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and was your daily TA wrap. Have a great night. I'll see you next time. Good night, folks.